Hitesh Oberoi, the MD CEO of the company, to talk about what transpired in the quarter gone by. Hitesh, hi, good afternoon. Thank you so much for connecting with us. Just want to understand segment by segment. First up, Naukri. How is the sequential tractor seen in Naukri as well as 99 acres? And the overall environment in the realty industry has been dull because of the tighter liquidity and economic growth concerns. But you still achieved an EBITDA break-even in 99 acres earlier this fiscal. So give us some sense of direction, some sense of outlook for 99 acres as well as Naukri going forward.
Yeah, so we've had a good 9 months in both Naukri and 99 acres. The job market has been looking up. The real estate market has also done well for the last 9 months. Our growth in the jobs business has been averaging about 20%, or so this year. And in the real estate sort of business, we've been growing at over 35–40%. We saw a slight slowdown in billing growth in real estate in Q3, and maybe there was some impact of the NBFC crisis on the real estate market. But in general, sort of, the real estate market seems to have stabilized. Transactions are moving up. New launches may have been hit a bit because of the market, but otherwise things are much better than they were last year, at the same time last year. The job market continues to do well. Last year we saw a big slowdown in IT hiring, but this year IT hiring seems to be back with a bang. And in general also we've seen sort of in a higher level of increase in the number of customers we are sort of doing business with this year than last year.
Hi Hitesh, this is Tara joining in from the New Delhi studio. So, it's a steady quarter. What can your shareholders look forward to? And, Karunya's touched upon Naukri with you. I want to talk to you about Zomato. That's what, became a unicorn last year. And you've got a big threat in Swiggy coming up. Can we expect any top-up coming up for Zomato to take on Swiggy? And are you maybe looking to monetize that investment at all?
Well, it's a competitive space. Both Swiggy and Zomato have been growing like crazy. Of course, they're also burning a lot of money. We continue to be sort of bullish on Zomato in the long run. But I guess, we are sort of, as you know, our stake is, our shareholding is now down to 27%. There are a bunch of other investors in the business as well. If the company continues to do well, we'll be happy to hold. But yes, the company will need a lot of capital going forward.
Could you talk to us about how the operating profitability picture is looking like for Zomato? We just touched upon how the competition in the space has been intensifying in food deliveries and Zomato Gold sales. How is the growth trajectory looking like? What could be the profitability that you can guide us for?
Well, this year, both I think the market has been very, very competitive. There's a lot of investment going into customer acquisition, into ramping up delivery teams. I don't have the exact numbers on Zomato. We don't sort of reveal results every quarter in Zomato. But basically, what I can tell you is that orders are growing at a rapid pace. New offices are being opened, delivery teams are sort of being ramped up in Zomato, but that is also leading to much higher burn than was the case last year. Last year the company was trying to sort of break even and sort of, but the war for the competitive intensity has sort of gone up in the market, and while the Zomato business is growing on a tear, but so is the burn. I don't know what the margin structure is like right now. But I know for sure that the company is consuming a lot of cash.
Okay, great to know that, Hitesh. Unfortunately, we're extremely out of time on